Good afternoon, ladies and gentlemen, and welcome to the Trinity Exploration and Production post-AGM Investor Update. Throughout this presentation, investors will be in listen-only mode. This meeting is today scheduled to last around 45 minutes. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to address every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. We'll make these available to you via your Investor Meet Company dashboard, and you'll receive an email to notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll. Once again, if you could give that your kind attention, we'd be most grateful. And I'd now like to hand over to Bruce Dingwall, Chairman, and Jeremy Bridger-Singh, Managing Director from Trinity Exploration and Production. Good afternoon to you both.
Thanks, Mark. Good afternoon, everybody. Jeremy and I will now, you pictures up to see that we're real and we're here, but to preserve bandwidth, etc., we're just going to turn our cameras off now and just go to audio, if that's okay. Well, welcome everybody to our post-AGM presentation. It was another virtual one, so I've had to drive through to Edinburgh back this morning, present myself outside our lawyer's office actually, and do some paperwork. But I hope you're all well. It's still strange times in the world. Britain seems to be getting back on its feet somewhat. Trinidad is somewhat behind. But vaccinations rather than Trinidad are accelerating at pace, and much of our staff now, particularly our frontline staff, have been vaccinated, which is good news. But COVID is still apparent in Trinidad, and the island is still closed, but we are managing our operations as well as we can. Since we last spoke, it's been a pretty busy time, as you can imagine. Obviously, operationally, we're continuing with our production operations, but also in the subsurface with our continued work on new business at Jubilee and with our onshore 3D, and of course with Galeota, bringing that towards FID. So, and on the commercial side, obviously getting PS4 closed and working on our new licenses, etc. So everybody's still pretty flat out. I guess as I move towards the first slide, just the usual ones you see before, the first slide here, which you've kind of seen before, the investment case. I think it's really important to understand that Trinity is a deep business and a well-established business now. I always like to say it's not an idea, it's a business. And to get us to this position has taken 5 to 6 years of really, really hard work post our restructuring. So we built this business that's delivered 5 years in a row on our targets. And of course, oil price has gone up and down, and I think that the model has stood that test extremely well, particularly last year, as you can see from our results. So we're here by design, we're not here by luck. But what's really exciting is the platform that we've built, and the discipline around that platform, and now the growth pathways that are laid out in front of us that in pretty short order, the next 6 to 8 months, we'll know where we're going. And they're all pretty radical in what they can do to the company. So the operating model and the business model is set. And the first thing is always that push on our operating costs and our margin. Because we are a manufacturing business, we've got to keep an incredibly close eye on what we spend and what our margin is for every unit we sell, which is our oil. So our EBITDA margin per barrel is a key indicator for us. Also now part of our business, it's not the future, it's what we're doing is automation for all the right reasons. It's in the end, it's to affect our bottom line the best, but also on that route, it's reducing emissions. It's making us a much more modern business and a digital business. And coupled to that, below the mudline, is us now working 3 dimensions with really good quality 3D seismic data. So when you add the above the mudline automation and the below the mudline, 3D data and ESP pumping techniques that we've kind of pioneered in Trinidad, you've got a very good base model. So the growth, of course, is coming both internally, organically, and externally. Internally, we've described it, the onshore, the 3D data. Ultimately, what we want to do is build an inventory of horizontal wells that don't deliver 80, 75 barrels a day, but delivering 300 or 400 barrels a day continuously. So that's our aim. And we're now into sort of month 3, month 4 of interpreting that data. It's going well. It's taking quite a long time because there's so much data, not just the seismic data, but we've got scores of wells to tie to that data, and using our new geological models, make sure that the data fits. So we've now got the methodology, if you like, set up of how we're going about that. The team is dedicated to take that forward in our onshore areas. Of course, what that's also doing is giving us a window, if you like, to the Northwest District opportunity that's fast approaching, which is the larger area in Southwest Trinidad. I'll describe in a second. There are also enhanced oil opportunities that we're duty bound to look at, and these will fall out of the anomalous areas that we're mapping now, that we're beginning to understand why channels lie here and why channels don't lie somewhere else. So that all works together. And of course, at Galeota and the Echo platform, that work continues. And again, that will be a fully automated platform, as I think you might remember, normally completely unmanned and powered from land. And ultimately, as you can see from the various MOUs and work we're beginning to do, we would like to power that using wind and solar power. So a really very modern, state-of-the-art, anywhere in the world type project, powered from land by green molecules would be an amazing thing to do. And that's not happened anywhere in the continent of South America that we know of. And of course, the West Coast, we look at everything, the ALM 22 area, which abuts the Jubilee area, which is another new bit of business that we're looking at, has kind of come back to the fore because we're looking at Jubilee. So we're examining that, and we have a dedicated geophysicist looking at that again. Inorganically, you remember we made the PS4 acquisition, which is to the east of WD56, so it's now a contiguous area. And we'll always look for good bolt-ons, but because I think we know the landscape so well, we know where the sweet areas are, and we know the assets that we like. But if more appropriate bolt-ons come, we'll surely look to do them. The Jubilee bid process, that's been extended towards the end of the year now, basically because of COVID, that no parties have been allowed to get on the platforms to look at the infrastructure, look at the state of the infrastructure, and do kind of audits on it because of COVID. So that's we've got more time to look at it both technically and from a commercial standpoint. The Northwest District bid process, that's pretty much soon going to start. The data room, that is. We've finished the last bit of legal work 2 days ago that allow us into the data room. So we would anticipate getting the data room into the next couple of weeks. And I'll talk about it a bit more. That's the huge Southwest onshore area that's under Petrotrin's license. And I've talked a little bit about renewables hooking into Echo, but also transition fuels, micro LNG. We're still looking at, and if some of you followed closely the energy conference last week, you could have seen NGC talking about they need to extend more and more fuel stations on the island and Tobago, but without pipelines. And of course, that's where the micro LNG units come in. We can't do that on our own. It's not right to do that on our own. We need to spread risk, and we need to spread the amount of capital, and we also need to partner with people that are enablers. So obviously we partner hugely with Heritage in the upstream, and of course we're looking at 2 potential bids with Cairn in the Northwest District and with Jubilee, a very strong partner. In the transition renewables, obviously the National Gas Company, they're a very, very big, very successful 100% owned government unit. And the University of the West Indies, which is a really globally ranked university that has phenomenal research and are very current in what's going on in the world. In fact, the team sat in on week last Friday, a bunch of MSc theses were presented to the company, and some really interesting research notes came up, and maybe we take on an intern or 2 from those MSc students. And as I said, it's to enable gates to drop. It's enabled technology to be applied. And when you go back to the various ministries and you say you're doing joint ventures with the NGC and the University of the West Indies, it all is appropriate and is all the right language, and it's actually the right thing you should be doing in a fairly sophisticated island like Trinidad. So sharing that exposure and sharing the capex and risk with the Cairns of the world, etc., is exactly what we think we should be doing. And also accessing world-class expertise. I built a company in the North Sea 20 years ago that just accessed the best subsea technology that was available at the time. And in Trinity, we're accessing the best topsides through Technique, Baker Hughes on completions, and using the best reservoir engineering group, Axis in Aberdeen, for much of our dynamic modeling. So really, and you encapsulate that with our local knowledge and feet on the ground, it puts us in a very different place. With that introduction, I'll let Jeremy take on the next slide.
Thanks, Bruce, and thanks to the audience for attending the update post the AGM today. Thanks. Yes, there was a pretty detailed resolution that we proposed to shareholders, which was passed, and we thought, in addition to the detail that was provided in the circular, we thought perhaps we put together a slide to try and describe it in as best as layman's terms as we could, as it relates to this capital reorganization. Really, the purpose of this reduction of capital and cancellation of the share premium account is to eliminate the accumulated deficit that sits within the company's equity portion of the balance sheet. And by doing so, in essence, we create a pool of distributable reserves, which once we have distributable reserves, we can in the future use to not just absorb further losses, but more importantly, and the aim of this is to provide the company with sufficient reserves, and once we have sufficient cash to fund dividends or other sorts of distributions to shareholders, such as share buybacks. And very importantly, this proposed reduction of capital, subject to High Court approval, does not impact your capital in any way. So the value of your capital is unimpacted by this. This is really a legal and accounting procedure. It's quite it's a process that is done from time to time, so the path is clear, but it is nevertheless something that is complex from an accounting and legal standpoint. So in essence, there are three main processes or main steps through this, where we look at the accumulated losses, and clearly the position of the company right now is that dividends cannot be distributed. And then we look at the means by which we can perhaps reallocate the reserves on the balance sheet. And that is a process that involves the share consolidation and the and the cancellation of the share premium account, the capital reduction, reallocation of merger reserves, which the combined impact of which will clean up the equity portion of the balance sheet, create distributable reserves, which will then facilitate the ability for the company to fund dividend payments and share buybacks through the capital portion of the balance sheet, but also once there's cash on balance sheet to do so. So in essence, very simply, what we're doing is the capital reorganization is a cleanup of the equity portion of the balance sheet to facilitate the way, or clear the way for dividends and share buybacks in the future.
Thanks, Jeremy.
Thanks.
I'll take the next slide. So just to remind you a little bit of the geography of Southwest Trinidad, you can see there's the land, obviously, in multicolored, and the ocean in blue. The green blobs are oil fields, giant oil fields, in fact, and the one red one there is a small gas field. And in yellow and in khaki are our licenses. And I think I said this last time, I think, to the investor community. It's always important to remember that our individual licenses are not single fields. They're portions within a giant oil field called the Forest Reserve Field that's produced 1.2 billion barrels to date, but recovery factors of 11 or 12%. So there's a vast quantity of oil still in the ground. So you can think of it that down to certain depths, we have the rights in a cylinder over all those areas. What's important to note as well, you can see outlined in the black line is the Northwest District 3D data set. So that's the total coverage of the 3D data set that will be included in the NWD potential farm-out process that we will start looking at with Cairn in the next couple of weeks. And the two red boxes within that is a 3D volume that we have. The Jubilee area off to the left in the marine area, off to the west, is the area that we're looking at again with Cairn. Again, we're still in the due diligence piece, and bids won't be submitted on that for several months. And as I said in my beginning piece, the deadline for that will not be towards the end of the year now because of COVID and inability of people to visit the asset. As we've announced pretty recently, we've got on our onshore licenses brand new 10-year licenses, which is double the tenure that used to be. And of course, coupled on top of that, we've been given new SPT and new royalty structures, which we believe, well, they will drive better returns. So if you think about us with a new data set, brand new licenses and better terms, you put all that in the pot, we've got a pretty attractive investment proposition going forward. Obviously, the PS4 acquisition I mentioned to you is contiguous with 5, 6, and WD2, and in a part of the basin and a part of the field that we like and we know pretty well. Our automation continues, slowed down a little bit because of COVID, but we continue. We've now got 23 SCADA units in place. The rest will be put in place in a slightly slower pace just due to a slight slowdown in work, but that's just a 4 to 5 week delay type thing. And as we said, the interpretation is ongoing. It's really important to understand that while this data set has been there for some time, the original owner of it, Petrotron, ceased to exist 3 years ago, and the new one, Heritage, who are now the custodians of that data set, own it. So really, nobody's looked at this data set in detail, probably ever, and we're certainly the first lease operator to really look at it, we believe, in detail over our licenses. So as I've said, some of you may know I'm a geologist, seismic interpreter by background. So we really believe, and the team on the ground believe, that we'll be redefining in geological and geophysical terms how this basin filled with sand, how it filled with oil, and then how it's deformed in terms of the structural geology. And this will enable us, we think, to much better understand previous volumes that have been drained, previous reasons why people have drilled wells, and the more modern reasons why we want to go and drill horizontal wells down channel sands where we can find them. So we will be, and we are developing new plays at local, micro local level, in fact, and also in a regional scale. Horizontal wells, because you produce higher incremental production levels, 2 to 3 times what we would get the vertical well, and same with reserves per well. So hence all the horizontal drilling that goes on around the planet. But also, while examining the shallow reflectors in the volume, obviously our geophysicists, etc., are also casting their eye on what's happening deeper in the seismic volume, so that when the data room opens in sort of 10 days' time, Trinity's already been looking at this data for coming on to 4 months. So we believe we've got a pretty good head start on others that will be looking at it, because we're already tuned in by 4 months. So we'll be able to, we think, accelerate and really understand the rocks better than others. That's not being arrogant, that's just a function of time that we've been looking at it. Results are really encouraging. What we've now done is established a methodology by which we tie a large well set and large production data set to the seismic, and very methodically and in great detail, the team are now tying all the past wells to the seismic and beginning to understand sand geometries, why there's water in one part of a well and not a well next door to it, etc. So it's a real phenomenal unraveling of historical production and also what we can do in the future. So we're really doing something very new and extremely exciting. Jeremy.
Thanks, Bruce. We thought we would take the opportunity to describe hedging a little bit more on what we do. We saw some questions coming in on this and general discussion around hedging. So we thought this was a good opportunity to describe what we do a little bit more. And in essence, the hedging is our insurance for volatility in the oil price. So our primary purpose for hedging is to mitigate the downward volatility in terms of the oil price. And we've seen a significant downward volatility during the course of last year. And because we would have hedged in 2019, we managed to benefit from those hedges in 2020. It's not always the case that a hedge will pay out, as is in the case of insurance. And also, just like in the case of insurance, there is a premium associated with hedging. And that premium can either be one in terms of cash, or as we also, in terms of the instruments that Trinity uses, the premium can also be paid in terms of giving away upside, in terms of either if you purchase a put option, then you can perhaps negate the cost of that put option by selling a call option. And Trinity has used various instruments. We've used plain puts. We have used costless collars, which involve a put and a collar. A put and a call. And we've also used 3-way collars. And most recently, we've used 4-way collars in recent times. And I'll go on to explain a little bit more. So the primary purpose is to be able to ensure that in the case of low oil prices, Trinity can ensure we have a certain level of cash flows that allow us to continue investing regardless of the oil price cycle. And this is important because it not only gives us certainty from a cash flow standpoint, but operationally, it allows the teams on the ground to continue working. And actually, by doing so, we preserve the integrity of the project financially and operationally, but also HSE as well too. And all those things combined and being able to have continuous activity on the ground is another clear differentiator where Trinity has been able to, through quite a few oil cycles in the last 4 or 5 years, been able to demonstrate continued investment. And the hedging has been a core pillar that has supported that. In the top right-hand graph, what we have there is what the oil price has been Brent since June 2020 coming through to the beginning of June of 2021. And the diamonds show where we executed hedges. On the left-hand side, you see we executed as the oil price started to rise. But subsequent to that, what we do is put market orders in place or limit orders in place that what they do is we look at what price we would like to pay, what premium we would like to pay. And if the oil price was to rise to a certain point, those orders will then be executed. We believe that, of course, that gives us the opportunity to time and price the options right. But within the market, you are still speculating about what is happening with oil prices. So as we set and as we observe the markets, we set the orders, observe the market, we then ascertain what the impact has been when the order is filled. We look at those criteria again in terms of what percentage do we need of production to be hedged in order to fulfill the low volatility, and what percentage we need to fill in terms of the low oil price volatility. And then the other criteria that we're looking at more recently with the oil price going upwards is protecting against the negative impact of SPT cash flows. And SPT, as you all know, has been removed with the onshore, rather kicked up from $50 to $75. And we've also, but that nevertheless still remains on the offshore production. And the offshore production, we are trying to mitigate the impact of SPT as oil prices go higher. So as oil prices go higher, what we've done is try to put in something called a put spread, which essentially pays out when we are in the SPT zone and helps mitigate the impact of SPT. That's the technique that we actually use in 2019 for 2020 that allowed us the payout of the hedge income that we received during 2020, which was quite substantial. So again, it is about we're looking at the market for us to understand where the market is moving and what options and what the cost of those options would be. Then looking at the underlying criteria about low oil prices and the impact of that on our cash flows, protecting that in the first instance. And then in the second instance, moving to the second priority, which is seeing if we can mitigate the impact of SPT on our cash flows as well. So with the oil prices where they are right now, we have locked in the low oil price volatility for half 2 of 2021 and for half 1 of 2020. We are now 2022, sorry, and we are now focusing on mitigating the impact of SPT cash flows for half 2 of 2021. All in all, this combines to be able to give us downside protection. It does mean that we give up some portion of upside, but that is a percentage that we closely manage to ensure that we have enough upside exposure retained so that as the oil price goes up, we still can benefit from the positive cash flows in that respect. Thanks. Bruce?
Sure. Oops.
Sorry.
This slide, ladies and gentlemen, really is a summary of when I showed you the geographical map of Southwest Trinidad. But really, we've gone through most of them, but we've got a really, really busy run up to the end of the year for some potentially big events. Obviously, Galileo to farm down. We are, the new license, we're pretty close to having that signed off. And of course, we'll let the market know when that happens in some detail. And that will then be the trigger for us to have a better idea of timescales for farming out and getting to FID and to first oil. But that's still being worked on by the team in the background, not just the commercial side, but obviously still on the pre-feed studies. I've talked about Jubilee. That submission will not be now until the end of the year because of COVID, but we're still evaluating that alongside Cairn. And the Northwest District I described is just about to kick off. Again, it's going to be a similar timing now to Jubilee, but it's a better defined type of project because you know exactly where the 3D lies is exactly the area that is going to be up for bid for exploration. And feeding into that is the work, as I've described in some detail earlier on, us developing new geological plays, understanding the conventional plays. And hooked into that, I talked about automation, obviously, as a standard part of our business now. The renewables bit, if we go to develop a new oil or gas field onshore Trinidad, we can't do it the way we used to do it. The world doesn't work like that anymore. We need to look at solar. We need to look at wind power. We need to look at being much more discreet about developments and making them as low carbon intensity as possible. And as I said, acquisitions, we'll look at the right ones, as and when they arrive. Jeremy.
Thanks, Bruce. This slide here is really for your reference, and we leave it with you for that, of course. But Trinity presented at the energy conference, the local energy conference last week, Monday and Tuesday. The theme of that conference was really about the energy transition, but there was a lot of emphasis placed on the existing reserves and resources from an oil and gas perspective. And the first day was with most of the prime ministers within the regions speaking, and the newly installed Minister of Energy. And some key points came out from him as it relates to his view. And his view was to try to get a number of projects that are on the boiler sanctioned as quickly as possible, so that the hydrocarbons could be realized whilst there's still a market and it's still, the shelf life is still there. I think, we took that very encouragingly. And further to that, he said his view was to work with very agile, nimble companies who can get things done quickly. And I think, we've got a project that we have put in front of the Ministry of Energy by way of the Galiwita Field Development Plan, which we will hopefully be describing to you all in much more detail very soon. But we also have a number of other projects that we'd like to discuss with the Minister of Energy. And we are also a small and nimble and very agile company. And on top of that, we are a local company as well, because the primary amount of our employees, in fact, 99% of our employees are local. So a lot of what you see happening within Trinity is coming from, local mindsets, local ideas as well too. So we think that will endear us with what is happening there. And we also heard the National Oil Company speak very clearly about their role and their strategy in terms of promoting oil production primarily and partnering with companies who have the capital and the technical know-how to do so. So we think, our strategy very much aligns to that when it shows on the Jubilee and in particular the NWD, as Bruce described. And moving further into the transition fuel specifically, the president of the CNG company within the National Gas Company, Curtis Mohammed, also spoke about the need to have more supply and midstream availability for CNG locally, to be able to spread the compressed natural gas network locally for transportation, but also within the region as well, to being able to take gas molecules from Trinidad up across to the islands and help them to have a cleaner fuel system than diesel or fuel oil that they're currently using for electricity as well as for transportation. And finally, the lobbying for fiscal regime change has continued, and it's grown. We would have described to you in many instances where Trinity is trying to change and leverage and get movement in the fiscal regime. And one of those recent changes was the impact of SPT being kicked upwards for the onshore production that we have and other producers as well too. And that has been significantly accretive already for the year, given that where oil prices are. And that is money that we can use and will be using to reinvest into onshore production and growing our production base there. But we continued within that, and that is now broadened and burgeoned into a very industry-wide lobby. And at the energy conference as well, to the head of the Energy Chamber's Fiscal Task Force, Mr. Peter Inglefield, also presented on what the key short-term measures are. And one of those was primarily on changing the SPT regime for mature offshore oil producers, such as ourselves in the Galiwita and the Brighton and Point Lego areas, and doing what was done similarly for the onshore by kicking the threshold from $50 up to $75. Again, if that was to happen, that would help significantly with our project and sanctioning and moving forward. Thanks, Bruce.
Thanks, Jeremy. On my concluding slide here, I think that Jeremy's described the land, and this is the government and prominent industrial people coming forward in the public arena talking about, a barrel left in the ground is no good to anybody as the world, common sense says, transitions to a different energy mix as we go forward. So, and against the backdrop of COVID and against the backdrop of lower tax receipts everywhere in the world, but also in Trinidad, we got a positive tweak to SPT for onshore last year. So I think Trinidad is still putting itself forward as a really positive place to invest. So if you take the local landscape, and I also think personally, the IEA published, I think it was yesterday, the day before, that demand in 2022 is going to be 105 million barrels a day, up from the current 93 it is. If you look back historically, industry has not invested seriously in the upstream since about 2012, 2013. There's going to be a shortfall of oil, I think, in the next 3 to 5 years. Ultimately, in 30, 40, 50 years, oil will have a much smaller market share. But I think the knee-jerk reaction we've seen around the world last year, it was needed to get change to happen. But oil and gas will be around for quite some time in the energy mix, and there's not enough investment going on. So I think, we're in a positive counter-cyclical period. And because we're in good shape, because we're free cash flow positive, and because we've made the right associations in terms of partners on the ground and externally, I think we're in a phenomenal place to really transform, our business rapidly. And we've laid out all those opportunities that really are in the next 6 months. There's others that will come behind that, but we've got some big ones right in front of us, which haven't arrived overnight. They come from years and years of relationships and years of discussing and thinking through these things, and underlined by a deep focus on HSE and financial prudence, which I think you all understand, and Jeremy's gone at some lengths to talk you through our hedging policy, and all that is to do is to protect the downside so we can continue to invest. So on top of that, the next layer is, of course, our ESG credentials are very important, but all of ours are plugged in to the current asset base that we've got in the current company. It's not about buying something else somewhere else in the world to make yourself more ESG savvy, as it were. These are all real tangible projects in and around our current database. So our drive is to create that yield. This capital reorganization is purely to get the company ready such that we can start paying dividends. And we are leading the change, even in our own small way in Trinidad, and setting new standards and innovating, which is the really exciting bit about being a business and being the oil and gas business. And I always say this at the end of my presentations, but the board and management own 22% of the company, so we're owner managers. So we are absolutely aligned with all of you out there that own stock or are thinking about owning stock in this business, that we are working so hard to deliver a step change in size and breadth and value of your company. Thank you.
Bruce, Jeremy, thank you very much. I am mindful of time and that we've got about 15 minutes for Q&A, but just please do submit your questions using the Q&A tab situated on the right-hand corner of your screen. And of course, the company review all questions that we don't get through today and publish responses where that's appropriate to do so. I'd also like to remind you that when this meeting's ended, you'll be redirected for the opportunity to provide feedback, which would be, I'm sure, greatly appreciated by the company. Bruce, so without further ado, I know you had a number of questions that were pre-submitted in advance. Perhaps I could ask you or hand back to you just to run through those that you can address now, and perhaps then look at some of these questions that have come in through the live event.
Sure, thanks, Mark. Some of these are quite complex, so I'll read the question, and Jeremy will answer. Between the two of us, we'll get through as many as we can in the remaining time. First question is the capital consolidation functional to enact dilutive rights issues or placements? Jeremy, you might want to just deal with that one.
Yep. Thanks, Bruce. Just going back to the explanation on the previous slide, really the capital reorg is to clear the path through the mired capital structure that we have right now, clear that up, create distributable reserves that will allow us then, once we've got the cash, to be able to return cash to shareholders through dividends and share buybacks.
Thanks, Jeremy. Next question was, in view of the positive developments for the company, can you give an indication as to when the dividend will be issued to shareholders? Maybe I'll have the first go at that one, Jeremy. We're getting ready. We're getting organized internally, so legally we can do it. And I think in the near to medium term, it's our goal to start paying a dividend. But we've got to make sure that we're generating enough cash that we can take forward our investment program. So we've got to weigh that up. We're not ready yet, but over the next period, we'll obviously review that closely, and the board do at every board meeting. But I think the sign is on the wall with this capital reorganisation that's our aim to do that as soon as we possibly can. And of course, when you pay a dividend, you don't want to pay a dividend one year unless it's an extraordinary one. You want to pay a dividend every year. So you've got to make sure that the RPM, if you like, the free cash being generated is enough so that you can continue to pay that dividend. Do you want to add anything, Jeremy?
Bruce, just to add on top of that, we've got, as you mentioned, a few different opportunities in front of us that can radically change the business. And I think we'd like to work our way through those, understand how those land. And by scaling the business, we will also be able to understand and split our cash flows going forward so that we can have our regular stream of returns to shareholders. And I think that is the place we'd like to be in, to be able to describe that better and then commence that process.
Thanks. Next question is, the gap between WTI and the realised oil price that Trinity receives from Heritage appears to have increased in recent months from about 2% to about 8%. Please could you explain why this is and whether this is likely to be temporary? Jeremy, you might try that one.
Sure. The 5-year historic discount between WTI and the oil price that Trinity has received has been around 6%. We've seen that in recent times, especially since Heritage has taken over from Petrotrin, and Heritage is now a disintegrator, or just purely an upstream company. We've seen the pricing method change because Heritage now sells its crude out on the open seas. And one has to remember that the crude that Trinidad largely, what Heritage amalgamates and commingles and then sells is what one would call a sour crude, and has high acidity within it, which is why it's called a sour crude. It's called the Molo blend. It's very similar to the Colombian Vasconian blend, and these typically trade at a discount to WTI and Brent. And once this is traded on the open seas, Heritage then provides us with a price that would have contemplated their midstream costs as well too, which would mean to gather, process the oil and get it ready for sale. So what we are seeing currently is in and around a 9% discount to WTI, and we are working with Heritage to understand this better so that we can have more certainty around the pricing mechanism.
If I add as well, I mean, we sell oils between, on land 18 to 22. It's a bit lighter on either coast. So you get for lower API oils, they've got, they don't have many light ends, so less kerosene, less jet fuel, so they're worth less. That's why there's a discount. And what Heritage do is, as Jeremy said, they blend all the oil they get, they accumulate and ship as one. So for some of our heavier oils, we're probably getting a premium, but for some of our lighter oils, we're probably getting a significant discount. So, but in the end, selling 18 to 22 API onshore oil for a 6 to 9% discount to West Texas is not a bad discount, considering that it is a sour crude, as Jeremy mentioned. This is a question. I know Trinidad and Tobago Chamber of Industry and Commerce has been encouraging the government to speed up the VAT refund process. According to page 56 of Trinity's annual report, 2.8 million of refunds are due for the period of January 2020 to March 21. Is Trinity expecting something like a repeat of last year's VAT bonds in the near future? Jeremy.
Sure. I think that's a pretty astute question, in that it happened last year, and it certainly helped businesses during what was a challenging period. And I say businesses, it's more than the oil sector. That was offered to everybody who had VAT refunds due to them by the government of a certain amount. It's something that certainly various chambers have been asking the government for. However, we had not had anything public by way of the government responding to that and saying that will be continued. However, we try to work with the Board of Inland Revenue, which are the tax authorities in Trinidad, to understand where there may be opportunities that we can use our VAT refunds, which are monies that government owes us, and see whether we can have the opportunity to set these off against some liabilities as they may arise. But that as well too requires agreement by the tax authority, and these are various mechanisms that we are working on to try to manage our working capital.
Thanks. Next question is more of a comment, so I'll ask Jeremy to comment on it. But what ideas for increasing oil production has Stuart Young suggested, implied, etc.? with direct access to the Prime Minister, he should be able to speed things up, one would hope. Jeremy,
Yeah, I think
that go?
Yeah, a good inference again too. I mean, Minister Young has been known as somewhat of a closer in terms of getting things done in the government. He's commonly referred to as the Minister of Everything because he's such an effective person. He tends to be impactful in various areas, and the Prime Minister has used him to that end. And we see it as a very encouraging sign that he's been placed in the Ministry of Energy to get things done, and that he's come out, with all guns blazing, saying that his view is to sanction as many projects as possible. So that's definitely very encouraging for our Galeota project. And we are looking forward to hearing his views on that. We understand he is looking at all of the projects. His focus has been to get the gas and the downstream companies back up and running, because we have a number of plants that are off there, and that has already started to bear some fruit. And we are looking forward to describing our project in more detail with him and getting Galeota off the ground as soon as we can.
Thanks, Jeremy. Another question was, how can we get the break even lower? One way is to produce more barrels, your cost fixed, but that's my simple way of looking at it. Jeremy?
I think where we are as a company and aiming for sub 30, which we've been comfortably below for the last 5 years, it is perhaps where we are at for this range of production. I say range of production. Maybe that was from 25 to maybe 4,000 barrels or so, where we have a large portion of the operating costs, namely about, I would say, probably about 80 to 85% of that are largely fixed. And we've seen that last year, where the operating cost on an absolute basis between 2020 and 2019 was 16.5 and 16.4 respectively, but production grew by 7%. And we saw the knock-on impact of that in terms of the break-even falling. I would say the next transformational change for that would be when we bring on one of these opportunities in front of us, for example, Galeota. Once we bring the Galeota on and you've increased production by, let's say, 4,000 barrels on top of what we're doing, that will be a step change downwards in terms of bringing the group's overall break-even downward.
Thanks. There's a couple of questions that have come in while we've been given the presentation that I might have a go at, and it's around horizontal wells and getting back to drilling. One question was, will we aim to acquire any more good value underloved onshore wells? What we prefer to acquire is good acreage that obviously has wells in it, because that's how we know that the acreage is decent. But is to then take this completely new approach that I've been describing, using the 3D seismic, to then, rather than just drill near vertical wells that come in at 50 to 75 barrels a day, as we've been doing in the past, is to deliver high angle wells or horizontal wells that come in at 150, 175 barrels a day with commensurate reserve upgrades as well. So the next question then was, how many would we anticipate drilling H2? It's all a part of what falls out of the deep mapping and data tying that we're doing now onshore. So as that develops, it's going to have to run for another couple of 3 months before we can start to really look at individual targets. But we are seeing some really good signs that they're there. So as we get well into the second half, we'll begin to understand what the inventory looks like. And once you understand and mature that inventory, then you've got to look at surface locations, you've got to look at well designs, you've got to look at well costs, you've got to model the reservoir, you've got to model the performance of what kind of pump we might use. Whole other bit of work falls out the back of that. So what we're going to do is get it right and get the risk right and get the upside captured, hopefully. So we've got to do the good science and good engineering. So it'll be sometime through the back end of this year that we begin to build what I would call proper inventory, and then we've got to go through the approvals process. So we'll get back to drilling as soon as we can, but we want to get back to drilling premier wells, drilling top tier wells with every well. Once, as I said, once we get further down the road with this new methodology we've got and this new mapping, looking at sand bodies rather than looking at gaps in the surface where wells haven't been drilled, then we'll have a much better idea of the number of potential wells we could drill, the reserves associated with it, the IPs associated with it, the economics, and then getting after it. So that'll be to the back end of the year. I'm just looking at the time. I think Mark, that's just
Yeah,
probably just run out.
I was literally just going to jump in. You asked me to come in at 45 where we are now. So perhaps, obviously, thank you to all the investors that have submitted questions. All those questions have been received and will be presented back to the guys with the view of being able to respond, of course, where it's appropriate to do so. And we will email you when that's ready for your review. So perhaps, Bruce, I could just ask for a few closing comments. And then what I'll do is I'll redirect investors to provide feedback and we'll take it from there.
Yeah, well, everybody, thanks for your time. Thanks for your support. You know, everything's going pretty well. We're flat out, which is great. We're in a good position. I think we're doing everything that we should be doing, and I hope more of these presentations that we're doing, even though it wasn't long from the last one, you're finding value, and we'd like feedback on that as well, because it does take quite some time to prepare this on the back of AGMs and all the rest of it, but it's an absolute pleasure to do it. And everybody, stay safe and look after each other. Thank you.
Bruce, Jeremy, thank you once again. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that management can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of Trinity Exploration and Production, we'd like to thank you for attending today's presentation. That now concludes today's session. Good afternoon to you all.